everyone. Thank you so much for joining us today. My name is Beth Farley, and I'm from the Reno, Nevada office. I've been working with nonprofits and specifically assisting clients with grant revenue and government grants for over 20 years. Hannah Horn will be joining us in a little bit as well and presenting later on, and she's based out of our Minneapolis office and has been involved in auditing government grants received by nonprofits for over 10 years. We're excited to be here with you today. Our agenda today, we plan to tackle 3 main areas involving grants, and these focus areas can help in any type of grant. However, as we move on through it, we're going to focus a little bit more directly on government grants, specifically federal funding, as we talk about the SEFA and single audit deficiencies. But we want to talk briefly about some best practices to track your grants and related expenses as well. So let's start with the best practices for tracking grants and expenses. Tracking and measuring the progress of a grant, both financial and programmatic, can be one of the greatest frustrations that a nonprofit has if their best practices aren't followed and systems aren't set up to properly track requirements of the grant. It's so critical to monitor the performance of the grant and to maintain compliance with the laws and regulations and any restrictions that may be placed on those grant funds. And an important piece too is that legislation around those grant funding and reporting requirements are always changing. So once you kind of go through to determine what is it that we need to be doing, all of a sudden something may change on you. So it's important to make sure that you're staying up on any changes as those happen throughout the year and throughout the grant period. And failure to do that can result in some serious consequences, which would be maybe material noncompliance and may cost the opportunity for an organization to receive future funding. So it's really important that all of those things are monitored throughout from the beginning of the application period and all the way throughout the reporting period and closeout of your grants. Communication between your board members, management staff, grantors is key to monitoring and tracking your grant progress. Your communications shouldn't start with grant individuals or program managers and then move over to financial people separately. It should happen as kind of a group as you're developing what grants you're going to apply for and as you move through the processes of each step. Proper monitoring of all stages of the grant process will allow for corrective action if and when you have that and it becomes necessary. And I'm just going to very much stress that upfront conversations with your grant personnel filling out the application. So it's not when you get awarded, but as you start to fill out those grant applications. You want to make sure that the applications that you're following and you're filling out, the budgets match basically what your chart of accounts, you don't want to have a different budget line items that are different for every single grant that you're doing. So you want to make sure that any separate process that you have, the application, the tracking, the reporting, none of those are done in silos. And then as you get that awarded and you start incurring those expenses, you want to make sure that the financial staff is communicating with the program staff and they're using the same reports and everybody's talking throughout that process as well. And then finally, as you close out the award, again, making sure that you've got all the information from the financial team and from the program team, and then you're evaluating it at the end as well. How did this grant work before we start applying for the next one? Was it a good grant for our organization? Did it meet the needs that we were hoping to? Did we spend more time on the administration of this grant than we actually got, programmatic use out of it? So you're kind of considering all of those things. So that's why it's important for all stages of those grant processes to be a team effort, not just your grant people, not just your program people. Everybody involved should be continuing to connect and to communicate the needs as you go through. So we're going to talk at a high level about several different types of grants. And the ones we're going to focus on, like I mentioned, are the government grants. And government grants can come from federal, state, or local. Then you would see foundation grants, family foundation, private foundations, maybe community foundations. And then you have some corporate grants that come from sometimes a certain percentage of profits from different corporations. So let's talk about federal grants. One thing that I really want to point out about federal grants is that federal funding status continues down regardless of whether or not you get the funds directly from a federal source, or maybe you got it from the state or from another nonprofit entity that passed those funds through. It never loses that federal significance and that federal funding source. And so it's important that you understand where your grants are coming from, because that can affect whether or not you need to have a single audit and tracking of those, and what also requirements that would go into them. So, you have different requirements. If it's a state grant versus a federal grant, potentially you have to file uniform guidance. If you don't have federal grants, then maybe you're only following what state requirements are. And at this point, when you are developing and getting these grants coming in, it's important that you read all of the grant documents. And what we find a lot sometimes is the grant documents can be extremely short. Sometimes you'll see a 2 or 3 page grant document, maybe a little longer, a couple more pages, but with a budget attached. But it doesn't really give you all of those rules and regulations you're supposed to be following. And so it'll really reference the code or the regulations that you then have to go look up and read into. So when we're saying that you need to read that government grant, that grant document, it's not just what you're seeing on that paper that was sent to you that you signed, but it's all of that referencing to the regulations that also tie into that you then have to go look up. And sometimes it can feel very circular because it'll tell you to go look up this, and then that code will look up another one. So it's important, though, that you're really documenting all of that and understanding what all the requirements are. Many of these grants that we see from governments typically are cost reimbursable grants, which you're at first expended and then you submit for reimbursement from a granting agency. Generally, a monthly or quarterly reimbursement request is submitted to the grantor, along with support for the qualifying expenditures that were made during the period. We'll take a little bit of time later to talk about recording the revenue, but what I want to really reiterate right here is that it's so important to understand what is required and when is required. There's some timing requirements for some of these reimbursement requests. You have to do it by the 15th of the following month, or maybe by the 30th of the following month. So again, when you get that grant document, you want to make sure that you're documenting what reports are required, how often, and what is the due dates on those, so that you're not missing any of that, any of those due dates. And then also, some grants will require supporting documentation. So you read through, you find out what are you going to have to submit when you do the request for funds, what are you going to have to submit when you do a grant report or a programmatic report, and you make sure that you start documenting that as those expenditures come in. You don't want to have to go back on a quarter report and then go back for 3 months and try to figure and get copies of everything. So whether or not that's physical or PDF, depending on how you submit when the transactions occur, making sure that you have the location of where all of that is saved, and so that the program people who are maybe doing the request for funds knows where the financial team had put that information, and those two teams are working together to make sure that the submission of the report is very, very seamless at that point. A little bit about foundation and corporate grants. Foundation grants are received primarily from entities who their sole purpose is to give out contributions, generally to nonprofits, and for the purpose of funding the organization's programs. And a lot of foundations will specifically tie into one type. So some foundations will want to support maybe pets or something along those lines, where they're really focused on one type of thing. A statistic that I saw recently was that from Grant Watch is that up to 90% of foundations don't publicly list their grants. So these can be hard to find sometimes. And so it's kind of a search from an organization standpoint to figure out, what grants that they would qualify for, and making sure that they have a list. So what a lot of organizations do is they maintain a list of the grants that they've applied for in the past, what the status was, if they got awarded it or not. That way you're tracking that year over year and kind of determining, can we reapply for this? Is this, why didn't we get this last year? Maybe there's something we could change to maybe be more qualify better for it this year. So I highly recommend a tracking sheet of what grant you're applying for, and, you know, all the parameters around that. Corporate grants a lot of times are coming from maybe their budget or the beginning of the fiscal year. They figure out how much their income was from the prior year, and they make those determinations on an annual basis. So kind of the same thing, tracking those, knowing who the contacts are, who you should be reaching out for to see if there's any additional ones. Typically, we see these as conditional or unconditional and may or may not be restricted. Sometimes you can get a lot of these that are not restricted, which is great for general operating purposes, but you want to be very careful when you get these to understand. Usually reporting requirements are a little less with these types of grants, and maybe do not need as much supporting documentation to go to them, but still the tracking is important to make sure you know what expenses went to that so you can properly report. All right, so we have our first polling question. So we always like to kind of know, you know, where is most of your funding coming from? Every entity is slightly different, and I think more often we see a lot of federal and not as many state and local, potentially not very many local grants. I don't know about you, Hannah, but I don't see a lot of local grants, very few of those.
Yeah, and I feel like I'm seeing less and less corporate grants. I know Target's a big one here in Minnesota, and you know, they've kind of shifted direction of who they want to give their donations to. So kind of a decrease in some of those corporate ones for sure.
Yeah, yeah. And like I said, sometimes they're just hard to find to even know what you can apply for.
Yeah.
We're getting close. We have to wait for so many of the responses before we can move on to this.
Everyone, if you are here for CPE, please make sure you are answering these polling questions. Make sure your slides box is maximized so you're able to see the polling question. You can answer right on the screen, and then you'll scroll down a bit and hit submit. If you are answering the polling question in the Q&A box, it will not count for CPE, so please make sure you are answering right on the screen and hitting submit. And we'll keep it up for a few more seconds, and then we will continue. And then it also looks like we have a Q&A question in there if talking about our grant budget. You see that one right there?
Yeah, it includes, so asking that our grant budget includes salary and 30% fringe. When we claim fringe, can we claim a simple 30% of salary we are claiming, or do we need to claim 30% of the actual benefits we're providing to the employer? And, you know, Patty, I'd really love to have a conversation with you about this directly, because it can really depend on where the grant funds. If you're talking about a federal funds, then you have to dig into what the uniform guidance would allow you to do for salaries and fringe. And you can do that. It really needs to be based upon actual cost, not an estimate. You know, an estimate can be calculated and then evaluated based upon actual, but it has to, your estimate has to come from the actual cost that you experienced before, and then do kind of a true up. So federal dollars can be very, very particular. If it's not federal dollars and you're looking at foundation or corporations and you don't have federal funding, there might be a different answer that we could kind of talk through. So there's a lot of things that go on with that. But I'd be happy to reach out. I'm going to keep that, and maybe we'll send you an email to talk about that more directly.
I can definitely get that for you, Beth, and you are good to continue.
Okay. Okay, so when we're talking about, because the next big key thing is we've received these grant funds. So when do we recognize revenue on grant funds? It's very important to make sure that we're evaluating generally accepted accounting principles. So we take it back to, you know, the FASB codification, which is 606 for exchange transactions and 605. If you like to know the FASB codes, those are the two to go look for. Exchange transactions means that there is a commensurate value. You provide a service in exchange for compensation back, and the service is provided to who paid you. When we look at grants, it's very, very unusual, at least as far as what I've seen, that there's going to be an exchange transaction, because typically, you know, the government's providing you and you're providing that out to the public benefit as a good, not back to the government or to the nonprofit who provided you those grant funds. So we're really not going to talk much about exchange transactions because we typically don't see that. But then once we've evaluated, okay, this is not an exchange transaction, this is a non-exchange, we're going to look at 605, which talks about whether or not we're first going to evaluate, is this a conditional grant or a non-conditional grant? And then you evaluate after that with or without donor restrictions. All of that will affect your timing of recognition. So let's talk briefly about conditional. In order for a grant to be conditional, you have to have a right of return and a barrier. The right of return should be written into the grant agreement. So I think sometimes we expect if we don't spend the money, we probably have to give it back, but that's not always true, and that's not always written into the grant agreement. So we really want to see something in there that there is a right of return, meaning if these funds are not spent, they would have to go back to the grantor. A couple things we look at to indicate whether or not there's a barrier would be, is there a measurable performance related barrier or some sort of measurable barrier that you have to meet in order to make sure that you can receive those grant funds? Is it related? Is the stipulation in the grant agreement related to the purpose of the grant agreement? And also what extent the stipulation in the grant agreement limits the discretion of the recipient. So to really look at this in simple terms, if you have a grant agreement that's paying for salaries and it's for the specific program that you have as salaries, that's a pretty strong barrier. And a lot of the grants that we do see from federal grants do have some sort of right of return as well. So we do see a lot of that. And then once we say, okay, this is conditional, we've got a right of return, we've got a barrier, you're going to recognize that when the grant conditions have been met. So when you've expended those funds, you're not going to recognize it when you receive the grant award, you're going to recognize it when you expend those funds. If a grant does not have a right of return, which we don't see as often sometimes with foundation or corporate grants, it won't specifically state on there, then you would want to determine is there a donor restriction on this? And if there's a donor restriction, you still recognize it upon receipt, but then you need to track what that restriction is and make sure that you're spending those grant funds in accordance with that restriction. If it's unrestricted, which is everybody's favorite kind of grant funds, right, is that you can use it for any general operations and you would recognize it without having to do any tracking over the spending of that, except for internal management to make sure that you know where you're spending it for your managing of those funds. All right, we're going to talk real briefly about grant expenditures, because most of what we're talking about, like I said, is reimbursable grants. And so it's really crucial that as you start looking at how you're going to record the grant revenue, let's evaluate how we're going to do the expenditures, because those are tied together. You can't recognize the revenue without the expenditures. Funds must be properly recorded in accordance with generally accepted accounting principles. So evaluating, is it in the right period for your expenditures? Have I done it correctly to meet, any GAAP expectations? It is best practice within your accounting system to determine what options you have in there to make sure that you're tracking those expenditures by that grant. A lot of nonprofits will use QuickBooks, so there's classes or projects, something along those lines. I know that I've seen other ones where they use tags in a particular program. Somewhere in the system, it would be my recommendation always is that those expenses are tying back to that grant. That you're able to tie revenue and expenses. Individual, and so it's kind of the same thing. When you get this grant award, you're going to go evaluate how we're recording the expenses, how are we tracking grants individually within our accounting program, and making sure that you're communicating that. One thing I want to talk about too real briefly is that you want to use the same language throughout your organization. Your program people might call it one thing, the grant award is called something different, financial team calls it something different. There can be confusion in what grant you're talking about. So when you get a grant award, you decide, okay, we're going to call this, XYZ grant, and you're going to use that same language in your accounting system and any program documentation, whatever it is, so that it's very clear what grant you're talking about. Any communication in this, possibly of non-compliance, you kind of waste your time trying to figure out what you're talking about. And then if you don't spend it all, or you maybe underspend it because there's not a clear communication on that. All right, so most grants are going to have some form of grant reporting, either very detailed or not as detailed, depending on, like I said, if it's, from a government grant or not. So tracking those grants by the source, and the biggest one is going to be federal versus non-federal. So making sure that in your accounting system, you're able to look at a report and say, we had X dollars of federal dollars and X dollars of state or corporate or whatever else that you're looking at. But federal is very crucial, because once you hit 750,000, that's going to trigger a single audit. And you want to know that in advance. You don't want to get to the end of your year and close it out and go, oh no, we need a single audit. We've never done that before. So you kind of want to be monitoring that, as you start to get towards the end of your year, where are we going to land? Are we going to hit that or not? It's also important to make sure that you understand what state you're operating out of, because some states may have reporting requirements based upon the gross level of receipts. So making sure that you're recording your revenue in the right period in accordance with generally accepted accounting principles, you're recognizing that grant when you need to, can affect whether or not you might have some state potentially audit requirements. And always, and I'm going to keep saying this, reporting out of your accounting system is the best practice. It's so crucial to make sure that you can show what expenditures, that you're not showing the same expenditures on two different grants, and you're really keen into that. Everything goes into the accounting system as much as possible to show what's being reported under each grant. So let's look real quick on just some general transactions that we can talk about. So the first one I'm going to talk about real briefly is fee-for-service grants. So this can be a grant that maybe your revenue is based upon your client served, your number of days, possibly the service that's offered, provided, something along those lines. Once you get to the end of the month and you go, okay, we can bill $100 per client served, we determine how many clients you served, you're going to recognize how much revenue. You're going to debit accounts receivable, and you're going to credit the grant revenue for that time period that you had those clients that are served. There's not a direct expense that's going to tie to that revenue. However, even in a fee-for-service grant, I think it's really important to make sure that we're tracking those expenditures in the same classification or project to understand the cost of your program. Because as you go out and do funding, maybe you're getting $100 per client served, but it's really costing you $120. You need to understand that for your fundraising and your discussions in in understanding, can we ask for more funds next year? If you're not tracking that, even though it's not based upon those expenditures, you don't know if it's earning money or not earning money and where you're at. So that's just as important. The next one would be in a reimbursable grant. So the expenditures are entered into your accounting system. A report from the accounting system should be printed to show the detail of the expenses, maybe not just the total too, the actual detail. And then will require each expense to be invoiced or supported. So you're going to gather all that information from internally. You're going to create your request for funds that has all that support on there. And then you're going to enter an accounts receivable, a debit for whatever dollar amount that is, and grant revenue credit. And the reason why I'm saying printing that out is because if you can change something, if there's a journal entry that gets entered or another expense that gets entered later, and you go back and look and say, okay, we billed $20,000 for the grant this month, and now I'm seeing $21,000 of expenditures in there, you kind of want to understand that difference. When you do this correctly, when you look at that classification or that program, then you can kind of see that should net out to zero. You would have $20,000 of expenses and $20,000 of revenue. And you don't want to just look at the month. You want to make sure you're looking at the entire grant period, because if you went back and changed something to a prior month, you would need to make sure you're doing a true up. So it's important that the report you're doing possibly, shows both of those items. So a couple of tips that I'm going to give on, missed one. Almost forgot this slide. Grants. So again, going back, got a new grant. We are going to track what the name of it is, the amount of grant, when it was received. We have determined in our documentation if there's a condition, if there's a restriction. You have a file that has either electronically or paper, depending on how you're documenting, that has the original grant award. It has any modifications you have, any communication that you receive from the grantor. If the grantor says, oh yeah, that's an allowable expense, well, that's okay, maintain that. Everything, it's not okay unless it's in writing, or it didn't happen, as I always like to say, it didn't happen unless it's in writing. And then all of your requests for funds with all the support, including reports from your accounting system. You keep that all in the same location so that as external auditors come in, as you guys are dealing with it next year, you're always evaluating those things to make sure that you're tracking and capturing all of that. A couple of tips that we have is, you know, and some of these are for QuickBooks, so some of that's verbiage you'll see here, but memorizing the transactions. Don't re-enter every single one. You might change the names. If you have an Excel spreadsheet, you're doing payroll allocations, you can upload. Really digging into your accounting program and seeing what you can do to memorize and make things go quicker. Making sure that you're using the donor and grantor names in each entry so that as a customer job, you're seeing that, using your classes, setting up memorized reports. That's a big one. If you can get those reports coming out of your accounting system and you go, okay, I'm billing for XYZ grant and here's the reports memorized, it's already set up. You just put the date parameters in there. It'll make it much easier. A lot of payroll companies will provide reports that if you give them the salaries, the time broken out by program administrative and grants, they can give you a report back to help you post those. So work with whoever's doing your payroll to make sure you're evaluating that. And then make sure you're not forgetting payroll taxes, employee benefits. Allocate those as well. You don't want to just do gross salaries. You want to allocate all the related costs to go to that. I think, and I'm going to try to look at some of these questions. I think I saw something about an Excel spreadsheet. Excel spreadsheet is super helpful. Make sure you have double checking journal formulas all over the place, that this matches to this. And then if you're using a spreadsheet to track anything, you want to make sure that you're still tying back to the accounting records. So if you have those expenses, because again, you can't use the same expense on two different grants. So you've got to make sure you're backtracking and still kind of following up with that. Review your process needs to include donor, grantor name, and program. Kind of speeding through some of this because I want to get to Hannah's stuff too. So we're going to jump on to the next polling question. I'm going to take
And while we wait on that, Beth, there was a question that said, do nonprofits need to maintain a separate account for federal grants?
There needs to be some way in your system that you can look and see that there are federal grants. So I would say most of the time it is nice to have a separate federal grants line account number that's in there. Because then you can see on your total profit and loss statement of activities that you can see that you have this many dollars in federal awards without having to pull out. You don't want to have to go into your system, pull out all your grants. Okay, these are federal, these are not. So if you're not doing that in your system, then you may want to track it in Excel. But if the system typically is a better way to do that. Yeah. Some of the more sophisticated, larger systems may be able to do that still in the same account, but have different tracking. If you're looking at NetSuite or something like that, there's some other ways to do that.
Yeah, and I would say if you're not sure, you can always check with your software provider, you know, find out what options they have as well to help with you.
Yeah. There is another question on whether or not GASB's revenues recognition requirements are similar to FASB's for revenue. There are potentially some differences between the two revenue recognitions. I think they're very similar when you start talking about, they both follow uniform guidance. So the same rules come from the federal government. So governments using GASB, which is Governmental Accounting Standard Boards versus Financial Accounting Standards Boards, definitely have to both follow uniform guidance. There may be some differences. I'm not going to really go into that right now, but if there's a specific question that we can get that answered for you.
Okay, everyone, we will keep this polling question up for a few more moments. If you are here for CPE, please make sure you are answering these polling questions. Make sure the slides page is maximized so you are able to see the polling question. You will answer right on the screen and then hit submit. So please make sure you're answering the polling questions if you are here for CPE.
And there's a question about getting this recording. This will come out, correct?
Yes, the recording will be available within the week. So you'll be receiving an email and then the recording will be attached in there as well.
And then Jerry, there's a question about from Jerry talking briefly about subrecipient or having subrecipients. That's a very big deal to make sure that you're monitoring. I know that we are going to go over some common deficiencies that will address a couple of questions on that. But so I'll leave that to Hannah, and then if there's additional questions on that, we'd be happy to talk about it after as well.
Perfect. And you are good to continue.
All right, so I'm going to hand it over to Hannah now.
All right. So next, we're going to talk about the organization's responsibility with the single audit and the SEFA. And the single audit, remember, that is the audit of the federal expenditures, and the SEFA is the schedule of federal awards. So you'll hear me say SEFA a lot throughout this. Again, that's the schedule of federal awards. So it's been made very clear by the uniform guidance that the auditee or the organization is responsible for preparing the SEFA. So this is not something that the auditor is responsible for. So again, it's really important that you understand how to prepare that SEFA. The auditor can maybe help assist with that process, but it is, really the responsibility of the auditee or, you, the organization. And then the SEFA should also be based on the period covered by the organization's financial statements. So, for example, if you're a 6/30 year end, the SEFA should be based on that July 1st starting date through 6/30. And not the grant period. A lot of times grants will have a different period than what the organization's year end is, or it might cover a couple years, a multi-year grant versus a single grant. So again, you just want to make sure that you're only listing the federal expenditures that occurred during the fiscal year. And one thing to keep in mind too, when you're preparing the SEFA, it is based on the expenditures and not revenue. A lot of times that can be confusing, and sometimes those are the same numbers, but you're getting spending and getting reimbursed for. Your revenue is the same amount, but specifically when you're preparing that SEFA, it is based on the federal expenditures, what you spent that year, which would also include any equipment that you purchased or dollars that are put towards federal loans. And then there's lots of challenges with the SEFA. Again, one of the challenges we see a lot of organizations facing is the agreement acceptance date maybe differs from the period of performance. So an example of this, if any of you received provider relief funds, the dollars came in and were recognized as revenue in 1 year, but the period of performance extended further than that, and so it ended up being a part of a different year. So it was included on the SEFA in that other, and the later year after the revenue was already recorded. So again, it can be a little confusing. Also, through all of the past few years, there's been a lot of COVID funding, and so again, it's very specific. Uniform guidance, wants you to have that specifically identified on your SEFA. What is COVID funding and what is non-COVID funding? So that needs to be clearly listed as well. And then another thing that can be challenging is if you have an amendment to your grant agreement, that may change what the pass-through number is or the ID number. So again, just making sure if you're getting any amendments that that is being shown, reflected in your SEFA as well. All right, and we have a polling question here again. So have you completed the SEFA in preparation for your audit? So yes, you've prepared it how it's presented in the financials, or maybe you have all the detail and you have an Excel that looks that tracks everything, but it's not quite to that presentation that you see in the financials. Maybe you have the accounting system that has all the information, but you have used your auditor to help kind of gather that information out and put it into that format that you see in the financials. Or maybe you're just really struggling right now and you're having difficulty even getting that information out of your system.
And if you are here for CPE, please make sure you're answering the polling questions. Make sure your slides box is maximized so you are able to see the polling question. You will answer right from the screen, and then you'll scroll down a bit and then hit submit. And we'll keep this up for a few moments. Make sure you are answering the polling questions for CPE.
There's a question too, Hannah. Do expenditures include the amounts charged for the indirect cost rate for your SEFA? And the answer would be yes.
Yep.
Definitely includes. So if you get reimbursed for that, and that might be one thing that some organizations, especially if they're using the de minimis 10%, I've seen that's a reconciling item between what your accounting system has versus what you request for reimbursement, which I still think it's good to try to record that so that it matches. But if you don't, you want to make sure you're tracking that, and that definitely includes.
Yeah, and one other thing I wanted to mention too, if you aren't preparing it exactly how you're seeing it in the financials, you can always ask your auditor for that format, because obviously your Excel and they're formatting it into that presentation, you can always request that from them, and then that way you can prepare it the way it ends up being presented as well. So that's always an option.
All right. And
there's another question. Oh, yeah.
I'm sorry. Go ahead. No, you're fine.
There's another question on the SEFA, whether or not it's on your fiscal year or your grant year. It's definitely on your fiscal year. The grant year can be an identifier. Who the grant funds are being passed through is identified on your SEFA. It's also identified by grant year sometimes, because you want to make sure that the grantors, whoever's evaluating and looking at the SEFA, can identify the grant that they provided too, if they're using it for that. Is there anything you want to add to that, Hannah?
I would echo what you said. It's definitely based on your fiscal year. One thing that's confusing is if you have the subrecipients, and that's cash basis versus accrual basis. So there can be some trickiness with that, but again, just being aware of that when you have subrecipients.
And then, we have another one that just popped up.
Can you have indirect expenses account at year end? I'm not sure. An indirect expense account.
So I'm thinking maybe what that is tying to is that when you do allocate your indirect costs, how does that appear in your accounting system? And so, if you're, depending on if you're using the 10% de minimis or an indirect cost allocation plan or an indirect cost plan, a lot of organizations will do a debit as an expense to one of your grants and then a credit to your admin class. So that in total, it nets out to zero, and that there's a zero, but in each classification or each program or however that looks, you would still see that, but it's not an actual, because it's not an actual expense to you as an organization, but it's really moving that indirect expense as a bucket item to the different grants.
All righty, and we are good to continue.
Perfect. I know there's a few more questions. We'll maybe circle back on the next polling question to make sure we can get through the next few slides here. So as an auditor, again, a lot of times clients ask me, if they should include expenditures that were passed through to them on the SEFA. It really comes down to if the grantor sees you as a subrecipient versus a beneficiary. So if the organization is a beneficiary, then typically you're receiving federal funds for the purpose of carrying out a program, and you're not subject to single audit. So if the organization is a subrecipient, then typically the grant agreement will have some sort of language that says that the organization needs to follow uniform guidance. So that's a key thing to see. Or if it says you have to have a single audit if you have more than $750,000 in federal expenditures. There's also little things in there they may refer to as the grantee, that they're the grantor, or that you're, sometimes there's language about, subcontractor or, subrecipient. But if there's any confusion with that as well, I would encourage you to reach out to the grantor and ask how they view the relationship. Are they Do they view you as the subrecipient or just the beneficiary of these dollars? And again, there was a lot of confusion with some of the COVID money. So, it's just best to just ask those questions versus assuming, and then sometimes you're missing if it should have been on there, the SEFA or not. And again, a lot of times if it's money coming from the state or local government, typically they would see you as a subrecipient. But again, you can always reach out and ask them. And then I just wanted to quick touch base, if you haven't done a single audit in the last year, just a reminder that they have switched from using the DUNS IDs and using the unique identifier ID. And so if you aren't sure what your unique identifier is when submitting that federal information, you can go to the SAM.gov website and it'll have it there for you. All right, so now that we've talked through tracking of grants and expenses and things to consider when we're preparing the SEFA, the last thing I wanted to cover today was just some of those common deficiencies that we see come up through the single audit and also ways to avoid those. So if you receive federal grants, it's extremely important to really implement strong internal controls if they're not already in place in your organization. A lot of times organizations, if you've been operating without federal grants, you have your internal control system and you're, kind of going through that process of your checks and balances. But if you receive federal funding, there's very specific compliance pieces to those grants that as an auditor, we have to go look at the controls specific to those compliance areas. So again, it's just really important to have very strong controls over those compliance areas and have those policies documented. So again, those are things that we will see that come up as a finding because they're not documented or they're not designed to determine if there's an error in the compliance process. And so you may have findings that are compliance related because those controls they weren't designed to help avoid those findings. It's also helpful to have an understanding of the compliance requirements in order to help properly design your internal controls to prevent that non-compliance with the grant. So again, each year there's a compliance supplement that's posted and it states what's going to be applicable for compliance areas. And so it's helpful if you want, just quickly go look out there, look at the grants that you have and see, which compliance areas you really need to make sure you have controls over. And then a common area in single audits, as I mentioned, that's tested for compliance is allowable costs and allowable activities. So typical finding that would come up through this area is improperly allocating federal dollars based on time and effort, and then not truing up budget to actuals for payroll or fringe benefits. It's also really easy to forget when you're applying internal controls over payroll. A lot of times there won't be anything related to salaries because, they're given the same amount every paycheck, and maybe they don't have to fill out a time card like a hourly staff would have to do. But again, when it comes to the single audit and looking at those controls, we need to see something over all types of payroll, not just the hourly staff. So again, ways to prevent this is to ensure that your payroll records meet the standards for documentation. There's a great guidance on compensation related standards in the CFR, which is noted on this slide here, so you can always look that up. Subpart E also include what's unallowed for expenses. So if you're not sure if this, you're incurring certain costs, if you're sure that that's allowed, Subpart E kind of lists all of that out for you, so you can take a look there as well. And then you want to make sure that you're also reading the grant agreement itself, because sometimes the grants, in addition to needing to follow uniform guidance, there may be additional requirements in that grant agreement that you also need to be in compliance with. Maybe the state has some more restrictive compliance things than the federal government does. So when they're passing those dollars to you, you need to follow what their compliance items are as well. And then also within the allowable costs and activities, there's also rules to follow with indirect costs. So errors that we typically see when it comes to indirect costs include using a standard indirect cost base on a budget, but not adjusting them for the actual direct costs. Another error is sometimes, costs are being allocated in accordance with the cost allocation methodology, but it's not done consistently. So again, that can be an issue. Or organizations are using unallowable costs in that cost allocation. And, if you have more than one federal grant or multiple grants, sometimes we've seen where, you're accidentally double dipping and basically applying the same overhead expenses to multiple programs, which you want to avoid doing. So again, ways to prevent this is really to, make sure you're monitoring any changes to the funding so that those changes are updated. Another thing you can do is when you're reviewing your cost allocation plans or indirect cost rates, just make sure that you have an understanding of what expenses make up that indirect cost rate. So that you're not using the same expenses more than once. But cash management is another audit area that is tested a lot in single audits. The most common error in this area is when you're requesting funds in advance and not reconciling advancements to your actual costs. So to prevent this from happening, just make sure that you know the terms and conditions that apply to your grant, and then making sure you also have a drawdown process that matches the allowable methods. And if you have any program income, that you're reconciling those as needed as well. A few years back, the Uniform Guidance clarified that all organizations need to have a written formal procurement policy, not just a verbal one or kind of a general understanding within the organization. It needed to be written out. So that was probably the most common finding we had, was just not having that written policy, which is a really easy thing to fix. Just take some time, sit down and write that process out, what that policy is, and make sure you understand it. So that, another finding that we have is that you have that policy, but then there's not support for the documented quotes for large purchases, or a lack of competitive bidding, or that the documents just aren't retained, to be able to show that you followed your procurement process. So, again, an easy way to avoid those findings, just have that written policy, make sure you understand it, you're following it correctly, and maintain that documentation of all quotes or bids so that it's very easy to support that you're following that procurement policy. The last area I wanted to touch on was reporting. So the typical findings with reporting will include the lack of supporting documentation or lack of support for reconciling items in the report, similar to what Beth had mentioned, like if you have that indirect piece that you're reconciling in, if you're not maintaining documentation for how you came up with those reconciling items, that can be a finding. So again, ways to prevent these findings would be to retain that support in a central location. It will make it easy for you then to find and be able to provide to your auditor when that documentation is requested. And then also just make sure someone reviews the report before you're submitting it. A lot of times we'll see that the person that's preparing it, will sign off on it. And so there's not actually somebody else looking at that report before it's submitted. So again, it's a really easy thing to fix that. Just make sure whoever prepares it doesn't also, review and submit that report as well. And then the last thing is just to have clear documentation for any variances within the report.
Okay, we are towards the end, and we could take out a few more Q&A questions if you'd like.
Yes.
I saw one. I know talked about subrecipient payments on the SEFA or cash basis and not accrual. This is correct. But you do report the expenditure on the accrual basis on your financial statements. So sometimes you can have a difference between the two. Very confusing, and it can be easily missed. So that's an unusual item, but that is correct. I think this is a good one. Final authority on subrecipient versus beneficiary reporting. What I recommend, like Hannah said, is to ask your grantor which one they see you on, but then taking that uniform guidance and stepping through the definition between the subrecipient and the beneficiary and making sure that you're documenting very well why you've made the determination if you're a subrecipient or beneficiary, or if your subrecipient is a subrecipient or beneficiary, if you're passing through funds. Again, documentation, making sure that you've done the evaluation and you've documented it very well, will be your first line of defense with any questions that come up with it later.
Did you already answer this? Who is the final authority on subrecipients versus beneficiaries?
That's what I was just saying, is that you want to document your
So I think that also kind of answers the next one. What is the pass-through entity's responsibility to ensure that subrecipients have documented adequately designed and effective operating controls? So when you are a subrecipient, or when you are passing those dollars through, I guess, is this from the grantor or grantee's perspective?
Probably from the grantor. If you have a subrecipient, what is your responsibility? I think
Got
that's
it.
what they're asking. Yeah.
Yep. So it is your responsibility to do a risk assessment and determine, what their controls are in place, and follow up if they have an audit that you're reviewing their audited financials, having an awareness of what their operating controls are is part of that responsibility of the grantor. And then if you decide to use the de minimis 10%, do you have to do it for all federal grants, either directly awarded or as a subrecipient? No, you do not have to do that. Does Eide Bailey have an acceptable procurement policy template for a nonprofit with federal grants? I don't know if we have a template out there. But I want to say there might be a website that has that. Beth, I'm not sure if you have seen that before.
I don't have one.
I know we get asked that a lot. I haven't been able. I think there's certain non-attests that we don't want to impair independence by providing that. But I'm sure there's websites out there that have some examples. Propel Nonprofits might be one that would have that. You could check.
Yeah. National Association of Nonprofits has quite a few different ones on their website. It's usually where I direct them to. Happy to talk through it with you once you do get that.
Yes.
But a lot of times you can even start from the uniform guidance and kind of pull that and start using information directly from there and then tailoring it for yours.
And did you already touch base on the 3-day rule?
No. What specifically do they mean for the 3-day rule?
Can you briefly go over the 3-day rule? Participant, would you be able to give a little bit more information on what exactly you'd like them to go over? All right, and then we have another one that just popped up.
And we're probably not going to get to all of these potentially because there's quite a few. So if we don't answer your question live, we will definitely reach out to you through an email to make sure that we get that answered. Some of them might take a little long for us to answer too. Oh, so when you have 3 days for receiving the grants, to spend within 3 days of receiving grants. Did you touch on a rule for that, Hannah?
No, sorry. Let me go back up.
That must have been in your cash management, maybe something you said there.
I typically haven't seen 3 days of receiving grants. I think it's 30 days. And really, I mean, I guess each grant, has their own, can potentially have their own timing of when you need to spend it by. I know there was one going back down. If you disagree with the grantor on their determination of whether you're a subrecipient or a subcontractor, what do you do? I think it's really important just to have that discussion with the grantor. What's challenging is, as a grantor, they're going to list on their SEFA who their subrecipients are or aren't. And so if, based on what their determination is, ultimately they're the ones that will be communicating that out. And so again, you kind of want to make sure that you're following what they're doing so that it's consistent.
Elaborate on the size and timing requirement of having a SEFA. So a SEFA would result with needing to do a single audit. And so the timing of that would be, as you close out your year end and as you're doing all of your other year end close out, that you're preparing that for the audit so that you have all that information that's supposed to be presented on the SEFA. And again, that starts when you get the grant award, that you document all those things: pass-through entity, identifying number, CFDA, grant period, total award. All of that information would then go and make sure that you're tracking that as federal. I'm not sure on the size, because the size would just be depending on how many you receive. But the timing would be from the beginning, you start tracking that, make sure you have all that information, and then you start to prepare that SEFA as you prepare for your audit.
For subrecipient monitoring, how often do you repeat the risk assessment? Is that annually? I think it really determines, it should be based on when you're making that agreement with them. So if you're doing like a 1-year agreement, then you would do it annually every time before you go to grant out funds again. I don't know that it's necessarily required if you had a 2-year agreement to be doing that every year, but probably best practice. Do we have any additional education resources available from Eide Bailey for grant compliance? Beth, I'm sure we do. I'm trying to think where it would be.
On our website, if you, I'm going to pull it up real quick because I'll have to try to remember where they're at. But there are insights. So that's on the top of the page. There's insights. They'll have recorded webinars. We'll have articles that have been posted. So if you can kind of search through there, you can search specifically to nonprofits and then do a search on, grants, and you'll see some of that information that comes up there. And I think there was one we missed earlier too. A couple of them we actually skipped over. It's number 18. It says expenses made with federal loans included on the SEFA, even though the loan will be repaid with federal dollars. So, Hannah, I don't know if you want to take that one. I do know for sure that the original time when you expend those funds that's included in the loan, that would show up during the year that those were expended on the capital project or whatever those funds were being used for. There are some that require it to be included on the SEFA as the balance of the loan for the life of the loan until it's paid off. Not all CFDAs require that. A few of them do. I don't remember all of them off the top of my head. So it's potential that you would have a continuing requirement, and there may be a trend that more and more will start doing that as well. Right, Hannah?
Yep. I know like some of the federal or financial type loans, those programs, it shows up on your SEFA as the beginning balance of the year. I know there's other ones like the home program or other federal dollars that maybe are more for housing, that it shows up when you're expensing or using those dollars to do a build out or something. And it wouldn't stay on your SEFA. So it's not clear. It's not cut and dry of when you would have that on or not on your SEFA. It's kind of dependent based on each program.
Yep. There was another one too that we missed. It was for an 811 project rental assistant contract. Do you record the expenses or the total capital advance received? And I don't know that program very well. I've not worked with that one. So I don't know if you know that, Hannah, or if we should get back.
That one we'll probably have to get back to and kind of look at that one a little bit closer, because I don't also have any of those programs. And then I just wanted to quick circle back on the 3-day. So I do see that. And you are expected to use those funds, yes, within 3 days. If you're not and you've requested the funds in advance and you haven't spent them yet, I think that's kind of when that program income comes into play, and you want to make sure you're investing those dollars, or you're tracking those separately and making sure they're used as soon as administratively possible. So.
Okay.
And I know we're at time, so and then we went over a lot and we went over quickly because there's so much that goes into grants. Please reach out. Here's our information. If there's something that we can follow up with you, I do know that this was not beginning and it wasn't high level. It was kind of in that intermediate, which we did get a comment on. So if there's something that we can, answer some more basic beginning, we'd be happy to respond.